If you scalp, do this exact setup to avoid false breakouts. Scalping is one of the fastest, most precise, and potentially profitable forms of trading available today. Unlike swing trading or long-term investing, scalping demands extreme focus, timing, and discipline. Every single candle matters, every second counts, and even the smallest mistake can turn a winning trade into a loss. Among the many mistakes traders make, the most common killer is the false breakout, where price appears to break a key level, luring traders in, only to reverse sharply and take their money. Today, I'm going to share my exact chart setup for 1-minute scalps, the same setup I personally use that allows me to filter out false breakouts and focus only on high-probability trades. This strategy works across markets, stocks, Forex, and crypto, but it's especially powerful when you understand the psychology behind price movements, the patterns that matter, and the strict rules for entering, exiting, and protecting your trades. By the end of this guide, you'll know exactly how to read the chart, time your entry, place stops, set profit targets, and manage your trades for consistency. The 1-minute chart is fast-paced. Each candle represents just 1 minute of price action, and in that brief window, price can swing up and down multiple times. Many new traders feel overwhelmed because price seems chaotic on these tiny time frames. However, the truth is, the chaos has a pattern and logic if you know what to look for. 1-minute scalping is not about guessing or reacting randomly, it's about precision, discipline, and following a tested setup. Before attempting any trade, the first step is market awareness. You need to know if the market is trending or ranging, where key support and resistance levels are, and the average volatility of the instrument you are trading. Ignoring these basics is the fastest way to get caught in a false breakout. Understanding candle patterns in 1-minute scalps. Candlesticks are the language of the market. In 1-minute trading, you need patterns that speak clearly in seconds. Among the most reliable patterns I use are pin bars, candles with small bodies and long wicks. They indicate rejection at a price level. A bullish pin bar forms when sellers attempt to push price down, but buyers overpower them, closing near the high. A bearish pin bar is the opposite. On a 1-minute chart, a pin bar at a key support or resistance level often precedes a sharp move. Engulfing candles. When a candle fully engulfs the previous candle, it signals strong momentum. A bullish engulfing candle after consolidation indicates buyers are taking control, and a bearish engulfing candle indicates sellers are dominating. Timing entry right after confirmation is crucial. Inside bars, these candles are smaller and completely contained within the previous candle's range. While they signal indecision, they often precede explosive moves, making them perfect for scalping setups if confirmed by volume or trend. Doji and spinning tops, these show market indecision and can signal reversals, especially when forming at key levels. In a 1-minute setup, doji at support or resistance can hint at rejection or potential continuation. The key is context. A candle pattern is only useful if it occurs in the right area, near support, resistance, or trend lines. A bullish engulfing candle in a downtrend may fail, while the same pattern in an uptrend can trigger a rapid move. Entry rules for the exact setup. Here's the step-by-step process I follow for entering trades on a 1-minute chart. Identify key levels, look for recent highs, lows, and significant support/resistance zones. These levels act as magnets for price action and often determine where breakouts or reversals occur. Wait for confirmation, never enter on a first glance. Wait for a confirming candle pattern, such as a pin bar, engulfing candle, or inside bar at the identified level. The confirmation is your signal that momentum is aligned with your planned trade. Check volume. Volume is critical. A confirming candle with high volume carries more weight than a small volume candle. High volume indicates participation from major players and increases the likelihood that the move will continue in the intended direction. Align with trend. Even on a 1-minute chart, trends exist. Entering a trade in the direction of the short-term trend increases your probability of success. For example, in an uptrend, a bullish pin bar at support offers a higher chance of winning than a counter-trend setup. Execute precisely. Timing is everything in 1-minute scalping. Enter immediately after confirmation, using tight spreads and fast execution. Hesitation can turn a profitable trade into a loss. Stop placement. Proper stop placement is just as important as your entry. On a 1-minute chart, price can spike rapidly, and a poorly placed stop can get you stopped out immediately. My rules for stops are: place slightly below or above the confirmation candle. For bullish trades, below the low of the confirming candle. For bearish trades, above the high. Avoid arbitrary stops. Stops must respect market structure, support, resistance, or recent swing points. Adjust for volatility. If the market is unusually volatile, give your stop a few extra pips to avoid being whipsawed. Profit target rule: scalping is about small, consistent wins. My profit targets follow these principles: risk to reward ratio. Even on a 1-minute chart, I aim for at least 1 minute and 1.5 seconds. If my stop is 5 pips, my target is 7 to 8 pips. Key levels: I look at minor support and resistance levels as natural exit points. Price often slows or reverses at these areas. Partial profits: sometimes I take partial profits at 1x risk and let the remainder ride if momentum continues. This approach balances safety and opportunity. Trading psychology: 1-minute scalping is as much mental as technical. A trader's mindset directly affects performance. Key psychological principles include: stay calm. Quick price movements can trigger fear or excitement. Maintaining composure ensures precise execution. Control emotions. Greed and fear are the enemy. Stick to your setup and avoid impulsive decisions. Accept losses. Not every trade wins. Cut losses quickly, learn, and move on. Advanced tips and tweaks: use the right broker. Execution speed is critical. A slow broker can turn winning setups into losses. Focus on few instruments. Master 1 to 2 pairs or stocks rather than spreading attention thin. Time of day analysis: some markets are more volatile at specific times. Identify windows of high probability. Indicator enhancements, moving averages, RSI, and Bollinger Bands can filter setups, but only as confirmation, not the primary signal. Annotated example trades: Example 1, a bullish engulfing candle forms at a 5-minute support. Entry: 1 pip above candle. Stop: 2 pips below. Target: 5 pips. Outcome: profit in 2 minutes. Example 2, bearish pin bar forms at resistance with high volume. Entry: below wick. Stop: above high. Target: 3 to 4 pips. Outcome: profit in under 3 minutes. Analyzing multiple trades like this builds recognition of patterns and setups, allowing for instantaneous decision-making. Common mistakes and how to avoid them: chasing price without confirmation, poor stop placement, overtrading when setups are rare, ignoring volatility spikes and news events. Correcting these mistakes involves strict adherence to rules, journaling, and reviewing trades. Practice and drills: use a demo account to simulate trades, journal every trade. Entry, exit, candle patterns, and reasoning: review trades daily to refine decision-making. Conclusion and tabby: following this exact setup, recognize candle patterns in context, confirm entries with volume and trend, place stops strategically, set realistic profit targets. You'll avoid false breakouts and increase your probability of profitable 1-minute scalps. Save this video, use it next time you scalp. Practice, discipline, and consistency are your keys to mastering this fast-paced trading style.